The South Korean government plans to expand the scope of its tax on gains from financial investments from 2023 so that it covers all shareholders. This comes as part of plans to revamp the current financial tax system. Yoon Jung-min with the details.
From 2023, all shareholders, whether they are major or small investors, will be subject to tax on gains from financial investment. This expands the scope of tax, which currently only applies to those who own over around $831,000 in a single stock. The new tax will be on net profit with gains up to $16,500 a year exempt. The new rules also allow tax deductions to be carried forward for losses within 3 years. As well as introducing a tax on gains, the government will slightly lower the tax on stock exchange transactions from 0.25% to 0.15% by 2023. This comes as part of government plans for a revamp of the current financial tax system.
Recently, there has been a rapid change in financial markets as new financial products are being introduced. But the complicated financial tax system makes it harder for people to invest. So we plan to revamp the system.
The government will introduce a new tax system in 2022 to impose levies on gains from stocks, funds, bonds, and derivatives. But the finance minister said he expects the burden on small investors will actually be alleviated due to the lower transaction tax. He added only those in the top 5% of shareholders will be affected. The move brings Korea's financial taxes closer to other countries like the US and Japan. Yoon Jung-min, Arirang News.